necessary to do just now.
Sorry, Senator Bennett.
Thank you very much, Mr. Chairman. And Mr. Secretary, good to see you, and you continue to have interesting days in the Chinese sense of that term. I don't want to be overly parochial about this, but there's one section of this thing that does affect my state pretty directly, and since I only have 5 minutes, that's what I'll focus on. Right now, one of the problems we have in the economy is that there's not enough credit. We keep hearing, well, I can't get a loan. I've got a good deal, but I can't get any loan. I can't get any help. And in this proposal, you are killing one very major source of credit where there has been no difficulty with respect to the crisis. You said we're trying to deal with those that were essential to the crisis. I'm talking about ILCs. There is not a single ILC that contributed to the crisis. There is not a single ILC that went down. And interestingly, when Lehman Brothers went down, one of the crown jewels of the bankruptcy was, well, at least they've got an ILC that is functioning and that is financially sound. And you talk about adding a modest amount of increased power to the Fed. In this case, it's not a modest amount of increased power. It's actually a destruction of the industry. We're going to cancel the ILC charter. We're going to cancel their industry as a whole. So my basic question to you is, why does the elimination of ILCs, thrifts, and commercial ownerships of banks make the system stronger and safer when you have a track record, at least with the ILCs, that says that they, in fact, by virtue of their ownership, have been stronger than the banks? So you're going to wipe them out as a source of credit, take them out of the marketplace where they're providing niche credit for people that don't otherwise get it. And I'd like to compare that record with the track record of bank holding companies if you're going to say, where do you have a source of strength?
Senator, I agree. This is a very complicated issue, and it is hard to be sure what the right path is here. But let me just try to explain the basic principle that underpin this basic reform. Institutions that do things like take deposit and make loans, institutions that do things that are basic banking activities, they transform short-term liabilities into long-term assets, need to come within a common framework of standards and constraints and oversight. That is the basic principle we establish. If we do not do that, then all the risk in the system will migrate to those parts of the system where you can do similar activities but not be subject to the same basic standards. So our basic principle is a simple one, is that we want to eliminate those gaps and loopholes that allow institutions to evade those basic standards. Now, again, and we're trying to be careful to take on things that are essential, but that principle, I think, is an essential principle. Now, we may disagree on how best to do that, and we'd be happy to work carefully with you. We want to be careful not to do what you propose, what you suggested we're doing, which is to, in either the near term or the long term, diminish the credit-creating capacity of this financial system. And I don't think our proposal carries that risk. But I understand your concern, and we'd be happy to work with you to make sure that we do this carefully.
I just want to make the point that the theory is fine. The practice says that this is an area that worked. So one of the first things I notice in the President's proposal is we're going to take an area that worked and we're going to abolish it in the name of trying to make the system that hasn't worked a little bit stronger. I just have a very serious problem with that.
Well, as I said, I understand your concern, and we're happy to work with you, and we'll work with you closely on trying to address that concern. But again, it is true that the basic opportunity created by our structure, particularly in the area of some thrifts, to evade the stronger protections that exist for other institutions, did create and did add to the substantial degree of vulnerability we saw in our system. So we don't want to leave in place the same type of vulnerability, allow people to shop for a weaker regime with less rigorous standards.
You're engaged in overkill, in my view here. I know that the Fed has been after regulation of the ILCs for as long as they've been around. The Fed seems offended somehow that the regulation of ILCs is left to people like Utah and the FDIC. And so, as a matter of principle, the Fed wants to control these we've always prevented the Fed bureaucracy from getting their hands on these. So now, well, if we can't get our hands on them in the normal fashion, we'll just kill them. So I think the message I want to give, and I hope I've given, is that we're going to look at this one very, very closely.
One of the great virtues of our system is we can't do this without your support and encouragement of this body here, and so we recognize in all these areas where legislation is required, we're going to have to work to try to persuade you of the merits of these proposals and take your concerns into consideration.
Thank you very much.
Thank you, Senator, very much. Senator Kaka.
Thank you very much, Mr. Chairman.